Welcome back to Am I Catching a Falling Knife? The podcast where we cut through the noise and figure out if that stock tumbling down is a bargain or a bust. I'm your host, Dave, and today we're putting a retail giant under the microscope, Target, ticker TGT. This stock has seen a noticeable dip lately, making it a classic candidate for our show. Is it an opportunity or a sign to steer clear? Let's find out. The market narrative around TGT is pretty clear. It's all about weak discretionary consumer spending. When people tighten their belts, they often cut back on those non-essential items, and that directly impacts retailers like Target. This narrative was really underscored by their Q2 2025 earnings report, which not only missed estimates but also highlighted declining comparable sales. And if that wasn't enough, there's also been a CEO transition, adding to the uncertainty. Now, for those of you who might be less familiar, Target Corporation is a classic general merchandise retailer, helping families find everything from fashionable goods to everyday essentials, all at discounted prices. They operate as a single segment, and here's a crucial point. Nearly all of their revenue, 100% in fact, is generated right here in the U.S. So when U.S. consumer spending trends shift, Target feels it directly and immediately. Let's break down how this market narrative translates into actual numbers for Target. Since their business is entirely focused on general merchandise retail within the U.S., their entire revenue stream is incredibly sensitive to domestic consumer spending habits. The narrative explicitly calls out weak discretionary consumer spending and declining comparable sales from their recent Q2 report. Based on that, we're projecting a continued comparable sales decline of roughly 4.5% for the upcoming quarter. Now, a decline in comparable sales isn't just a simple percentage off the top, because Target, like many retailers, has what we call operating leverage, meaning some of their costs, like store leases and a portion of their labor, are relatively fixed. A percentage decrease in revenue typically results in an even larger percentage decrease in net income or earnings. We're assuming an operating leverage factor of about 1.7x for a big retailer like Target. So, if we take that projected 4.5% revenue decline and multiply it by that 1.7 factor, we get an estimated impact on quarterly earnings of about 7.65%. And then, when you factor in the additional layer of uncertainty introduced by that CEO transition mentioned in the narrative, which could impact sentiment or even operational efficiency, we've rounded that estimated earnings decline up a bit to approximately 8.0%. Of course, it's not an exact science. There's always a range, and our confidence interval here goes from a potential 10.5% to a 5.5% decline. That width reflects the inherent uncertainty in trying to quantify qualitative factors like consumer sentiment or leadership changes. So, how does this all translate into what the stock might be worth? To figure out what this stock is really worth, I'm looking at it from two angles, using data I pulled from finviz.com. First, a discounted cash flow, or DCF model. For this, we're making some key assumptions: a growth rate of negative 1.59% for the near future, a discount rate of 9.5% to reflect the risk, and a long-term terminal growth rate of 2.5%. Based on these inputs, our base case DCF value came in at about $111.53 per share. Now, when we apply the impact of our narrative, that projected 8.0 earnings hit, the narrative case DCF value drops to around $99.82. The second method is often a bit simpler, a PEG-based valuation. Interestingly, for Target, our PEG-based fair value comes up as null. Why? Because the E in PEG stands for earnings growth, and Target's projected EPS growth for the next 5 years is actually negative. A PEG ratio isn't meaningful or typically calculated when growth is negative. It's essentially telling us that on a PEG basis, it's not a value play right now given the contraction. So, considering all this, if you're looking to potentially catch this falling knife, some custom buy levels we've identified are $85, $75, and even down at $65, offering different entry points depending on your risk tolerance and conviction. So, that's a wrap on Target TGT. Remember, folks, this is for educational and entertainment purposes only. I'm not a financial advisor, and this isn't financial advice. Always do your own thorough research and consult with a professional before making any investment decisions. Thanks for tuning in to Am I Catching a Falling Knife? I'm Dave, and I'll catch you next time.